Hi everyone, Donna here. I am the owner here at Bookkeeping Made Simple, and I'm going to come back and revisit a topic I've addressed in videos many times. It keeps coming up, so we're going to keep talking about it, and that is commingling funds. Starting with, what is commingling and why do accountants hate it so much? Commingling is using personal funds for business expenses, or contrariwise, using business funds for personal expenses. Now, we can deal with using personal funds for business expenses. This does not happen very often. Where it gets messy is when personal expenses are paid for out of business funds. It also happens, and I've kind of laughed many years, for many years, I can always tell when a business is about to go under because the wife or the spouse seems to take the debit card for the business and she starts spending money. It's, as soon as I see that, I know they're going under. So when you set up your business, okay, you set it up, hopefully, you set it up as an LLC or a C Corp or an S Corp, depending on the needs of you and your business, okay? You did not set it up as a sole proprietorship because you're smart. You did not set it up as a partnership without some limit to the liability because you're smart, right? Yes, those are quick and easy to set up, but there are reasons why I don't encourage those. The purpose of these entities is to protect your personal assets from someone suing your business, and to protect your business assets if someone sues you. And let's be honest, in business, lawsuits are kind of part of life. So you don't want anything to happen that's going to combine those two entities. It's your business is not you, and you are not your business. And it's a very common thing I hear people say. They believe that because they own the business, they can really treat the business as an ATM. Under the law, your business and you are two separate persons. And you don't hold anything in common. Okay, the business assets are not your assets. Your assets are not the business assets. Your liabilities are not the business liabilities unless you have personally guaranteed a loan, and then you've accepted that liability. As the business owner, of course, you should get funds out of your business for your personal needs. That's why you own a business. I do not want to go out and get an employment when I can get funds out of my business. This is what I do for a living, and I adore doing it. But I need a way to get money out of my business to pay my personal bills. So there's a specific means to do this. You do not want to treat your business like an ATM. In other words, you don't want to go to the grocery store to buy groceries for your family, swipe your business card because it's just there in your pocket. You want to make sure you pay business expenses from your business account, personal expenses from your personal account, and never the twain should meet. They should be completely separate. When there are specific ways of getting money out of your business that do not do what we call pierce the corporate veil. And I'm going to explain what that means. Basically, what you want to do is you want to take a regular draw, either take a paycheck, which is really the most recommended, and that does entail taking on a lot of payroll liabilities. But if you take a paycheck, it's easier to do things like, buy a house, buy a car, take on debt if you want to, because you have a paycheck just the same as your employees, and you kind of live your life that way. You can also take a draw, and I recommend that those draws be regular and large enough. So in other words, if you figured your expenses and you need $5,000 a month to live on, you need to take either a payroll and a draw, or payroll or a draw of $5,000 a month. Better to do it just as if you were getting paid. Better to treat it just like a paycheck. Now, I want to talk about piercing the corporate veil, because this is why you set your business up to limit your liability. Again, when you set up your business as a LLC or an LLP or an S Corp or a C Corp, the LL in both LLC and LLP stands for limited liability. And an S Corp and a C Corp limit the liabilities that the owner is taking on as a result of doing business. So if someone sues your business, they don't get your house. If someone sues you, they don't get your business. Okay, they can't go after the people that they can't go after your employees. They can't go after your business checking accounts. They can't go after any of the business held assets because they're suing you as a person, right? And vice versa. If they're suing your business, they can't seize your personal accounts, your personal retirement, your home, your cars, your kids' things. Those things are completely separate. That's why you limited liability. But so you can think of it as a veil descends between you and your business. And each of those things are kept completely separate. When you start using your debit card for the business as if it were a personal card, you have pierced the corporate veil or lifted the corporate veil. I think the British prefer to say lifted, but you've pierced the corporate veil. You have basically told the law, well, you've created this veil between me and my business, but we're just going to pretend that doesn't exist. So in that case, in the event you are sued, when you go to court, the judge is going to say, have they pierced the corporate veil? The other side is going to say, they've pierced it. They treat the business as if it's their own entity. Their personal assets are all owned by the business and they shouldn't be. They're spending money out of the business that is for personal means, and so we should get everything. That's what the other side's going to say. I've seen it. When you lift the corporate veil, so what's going to happen is the judge they are going to subpoena all of your records. And if they can show, even if all they subpoena is your corporate records, if they can show that you have been spending money out of the business accounts for personal reasons, not taking a draw, okay, because those should happen regularly, not taking a paycheck, but if you've been using those funds just as if you would use your personal accounts, then the judge will say, there's no corporate veil here. This person has pierced the corporate veil, and therefore all of their personal assets can be sued for. On top of that, I mean, as scary as that is to think about, on top of that, if you spend your business funds on personal expenses, as a bookkeeper, as an accountant, I have to now start going through and figuring out which expenses are business and which are not. And the ones that are business are called qualified business expenses. I'm going to talk about that in the next video. But that's what we're looking for. Are these qualified business expenses, or is this personal expenses? Just a really quick story. I have had many, many clients over the years, and some has gone on to bigger and better things, and I'm so happy for them. I love to hear that they want to be publicly traded, so they need a CPA, and I can't help them anymore. And some have chosen to go in other directions in their lives. And a lot of them are still with me, I might add. Most of my clients have been with me for many years. But I remember having a client who, I don't want to go into what he did, but he was away from home a lot. And I've had multiple clients do this. All of a sudden, I'm seeing charges for adult websites on his business account. I'm seeing charges for escort companies on his business account. And I was kind of put in the position of having to say, no way, no how are those business expenses. Sorry, you can spend that money on that if you want to, but not out of your business account. It just, you are going to get into so much trouble. And not with me. I am not the police on that, but trying to, when you spend money out of your business account, a lot of that is trying to take that as a deduction, which is what he was trying to do. And I was stuck saying, it's not a deduction. It's not a qualified business expense. It has nothing to do with your business. No, you can't do that. So, be aware. At this point, I've seen everything that can be seen in someone's bookkeeping. So no fears. If you would like help to determine if you are commingling funds and how to stop, to set up a procedure that helps you keep your books separate, your personal and your business separate, we can help you avoid that. We can help you stay on the straight and narrow, or at least not veer too much to either side. To find out if your business qualifies for a free strategy session, please give us a call at 801-692-0032. There are a few minimum requirements for this, but pretty easy to qualify. Please, again, that number is 801-692-0032. Our team is standing by. We are ready to help. Have a great day.